Are you planning to invest in rental real estate in France? Whether you are a French tax resident or a non-resident living abroad, today I will explain in detail the French Micro-Foncier regime, who is eligible, when it is not allowed, how income tax works, how social contributions work, and most importantly, how much you actually pay to the French tax authorities. 1. The Micro-Foncier regime. Who is it for? The Micro-Foncier regime is available to both French tax residents and non-residents, as long as you receive rental income from property located in France. This regime only applies to unfurnished rental property. 2. Mandatory conditions to qualify for Micro-Foncier. To benefit from the Micro-Foncier regime, all the following conditions must be met. Condition 1. Rental income ceiling. There is a threshold. Total gross rental income collected during the year must be 15,000 euros or less. This is gross income before any expenses or charges. Condition number 2. Type of owner. As the owner, you must be either an individual who directly receives the rental income or an individual partner in an SCI taxed under personal income tax, provided that your share of annual rental income does not exceed 15,000 euros. But be careful, the Micro-Foncier regime is strictly forbidden for an SCI subject to corporate tax, regardless of the situation. Condition 3. Type of rental property. The Micro-Foncier regime is strictly limited to unfurnished rentals. It is not allowed in the following cases: furnished rental property, historic monuments, bare ownership or dismembered ownership, and 4. Properties subject to a special tax regime, another one than the Micro-Foncier tax regime. Number 3. Warning: tax incentives schemes. These are the special tax regimes just mentioned before. If you benefit from a French tax incentive scheme, the Micro-Foncier regime is generally not allowed. This includes in particular Pinel, Borloo, Besson, de Normandie, or any other regime granting a specific tax advantage with a French minister name, like the previous just mentioned. In these cases, you are mandatory under the real tax regime. That is different from the Micro-Foncier regime. Even if your rental income is below 15,000 euros a year. 4. How does the Micro-Foncier regime work in practice? The Micro-Foncier regime is designed to be simple and automatic, kind of simple. Tax calculation. First, you take the total rental income received during the year. Then the tax authorities automatically apply a flat 30% allowance. Finally, the income tax is calculated on the remaining 70% of your income. Remember, because of the 30% flat allowance. This allowance is supposed to represent all expenses combined. After this explanation, here is the key trade-off to understand. In exchange for simplicity, you give up all actual deductions. This implies no deduction for renovation works and no deduction for mortgage interest on the repayment. Most importantly, no deduction for real expenses. If your expenses exceed 30% of your rental income, then the real tax regime and not the Micro-Foncier regime is far more advantageous, as it allows you to deduct these costs. 5. Social contributions, CSG, CRDS, taxe de solidarité. In France, rental income is subject not only to income tax but also to social contributions. These two are different. Social contributions are calculated on the net income after the 30% flat allowance has been removed. So you take this net income and you apply to it 17.2% social contributions rate. Warning: special case for non-resident. The rate depends on your social security affiliation, and it can be lower than the 17.2% just mentioned before if you are affiliated with a social security system in European country or Switzerland. And if you're not affiliated with a social security system in France, both combined, you're allowed to pay a rate of 7.5% and not 17.2%. Absolutely genius, right? Totally. Clear example. A US resident living in the United States, 17.2%. Now, a resident of Spain or Switzerland with a social security affiliated in these countries, 7.5%. 6. Full practical example with a Canadian investor. It will be much more easier to understand the concepts. Here is the situation. Investor, Canadian. Tax resident, in Canada. Purchasing a studio apartment in France, unfurnished rental. Let's say the rent is 500 euros per month, so total annual income is 500 times 12, 6,000 euros. No other French source income. Tax calculation. Rental income, we said 6,000. 30% allowance, 1,800, because 30% of 6,000 is 1,800. So net taxable income, finally, 4,200. The 6,000 minus the 1,800. So these 4,200 should be taxed, but specific case, as in France in 2025, when you make less money than the threshold 11,500, you pay 0% taxes. This is just after this threshold that you start paying taxes. Taxable income is below the threshold, so taxable income 0. Now, social contributions. Remember, you're Canadian, living in Canada, so not social security affiliated in France or other European countries, so you will be taxed at the rate of 17.2%. So 17.2% of the net income, remember the 4,200, it gives you 722 euros to pay as social contributions. Final result, rental income received for the whole year was 6,000 euros. But you had to pay 0 taxes plus 722 euros of social contributions, so net income available in this example is 5,278 euros. This amount can be used to repay a mortgage if there is one, or as net cash flow if the property is owned outright. In conclusion, in France, even under the Micro-Foncier regime, you must always separate two elements: income tax and social contributions. The Micro-Foncier regime is simple, transparent, and accessible to residents and non-residents. But it is not always the most tax-efficient option, especially if you have significant renovation work, high mortgage interests, or substantial expenses. So before investing, it is therefore essential to compare tax regimes in order to legally minimize your French tax burden.